Have you ever seen someone actually win at taxes? My client Suni told me this might be the first time I've ever felt excited about taxes. And when he said this, it totally caught my attention because who gets excited about taxes, right? He made one move early this year that could save him hundreds of thousands and build legacy wealth that lasts generations. And the wild part? It involves giving to charity. Yeah, I know, sounds backwards, right? But today, we're breaking down the OCLAT, that's the Optimized Charitable Lead Annuity Trust, and how my client Suni used it to lock in massive tax savings this year, invest like a pro, and build a legacy that's gonna outlast all of us. Stay with me here because by the end of this video, you'll know exactly how to potentially save 6 figures on your taxes this year while building generational wealth. So here's the setup. Suni works in tech in San Francisco. Smart guy, careful with his money. He initially reached out after watching one of my videos and I helped him with some land conservation easements. He realized no one was talking about these more advanced strategies that we cover on this channel. So after filling out the form on my landing page, I got in touch and learned more about his situation. And we realized he was the perfect fit for something even better than what he initially was asking about too. So it was late January, he calls me up. I can hear something in his voice when he starts talking. And he says, Rich, I'm projecting a big year, like biggest ever. We're talking over 7 figures combined with me and my wife. But then he had this like sound in his voice. And I'm sure we've all had this moment. He's thinking to himself, wait, am I about to hand half my money this year to the IRS for taxes? And the tension at home wasn't helping either. His wife makes just as much as he does every year. And she's constantly telling him to stop trying new things with their money. Just, pay the taxes and be done with it, she says. But Suni's working for this tech company that's scaling fast and it's likely headed for an IPO. He gets a significant portion of his compensation in stock that's appreciated substantially. That creates a major tax situation if not handled properly. We've all been blindsided by taxes at some point. The difference is that some people are just the ones that accept it as the cost of success, while others end up seeking out experts to legally minimize what they owe. So Suni asked for my help, initially for what he thought might work for him, but what we found is that he's an ideal candidate for the OCLAT strategy. Why this matters to you. If you're expecting a high income year, what I'm about to show you could literally save you hundreds of thousands in taxes, money that stays in your family instead of going to the IRS. This strategy blew my mind when I first learned it, so let's get into it. Imagine a 401k and a charitable trust had a baby, and that baby grew up to be a tax-slaying generational wealth machine. Well, that's the OCLAT, and here's how it works. First, you fund a trust with cash, stocks, or appreciated assets. Second, the trust makes annual payments to a charity you choose for 20 to 30 years. Third, at the end of that time, whatever's left comes back to you or your heirs completely tax-free. Some like to call it the 1-3-5 rule. Put in $1 million. Over those years, give $3 million to charity. At the end, get $5 million back to the family, all while skipping estate tax, deferring income tax, and locking in a massive deduction up front. Let's take a quick what-if example. Say you just sold your business for $3 million. Without planning, you're looking at roughly at least $1.2 million gone to taxes. With an OCLAT strategy, you could potentially cut that tax bill by 40 to 60% immediately. Or let's say you bought Bitcoin at $5,000 and now it's worth a lot more. You've got a massive gain just sitting there. An OCLAT could help you offload that tax hit while still turning it into a long-term win for your family. Here's the tax-saving power. When you fund this trust, you get an immediate deduction that can offset a significant portion of your current year's income, while still keeping most of that money in your family long-term. And the best part? Most people have never even heard of this. Oh, and the real kicker, and this is where Suni nailed it, he didn't wait until November, the end of the year like everybody else, scrambling to do something before the year ends. He ended up taking action in March, and that gave him options. I remember him telling me, I didn't sleep the night I realized what was coming before we talked. SUNY's company had announced they were accelerating their timeline towards an IPO. And he knew that he needed to get ahead of the tax situation with all that stock options. So what did he end up doing? He funded the OCLAT with the appreciated stock, stuff that had already doubled since he received it. He got a big tax deduction, enough to wipe out a ton of his liability for the year. And he had time to plan how and where the charitable payments would go. And the part that might blow your mind really is that the whole thing was set up over 2 calls, probably took 2 days total. Clean, simple, everything's buttoned up. And now, I know what some of you might be thinking, but Rich, I'm not really into giving to charity that much. This seems like a lot of work just to save on some taxes. And that's exactly what SUNY said at first, but here's what changed his mind. With an OCLAT, the charity does receive annual payments, but the power of compound interest works enormously in your favor. Your contribution can grow significantly over time, providing both a charitable impact and then a substantial return to your family down the road. This could be saving you money right now. Every month you wait is potentially thousands in tax savings just slipping away. The people who win at taxes don't wait until December. They make strategic moves early. Listen, before I get to the next piece, I want to let you know something. There's a link in the description if you want to explore this strategy further. You'll get early access and I'll reach out to you personally if it looks like you're a good fit. So now, here's where things get really interesting. The deduction happens when you fund the trust, not when the payments go to charity. If you wait until Q4, everything gets rushed. Documents take time, planning takes time, and you'll be competing with everyone else trying to jam in a strategy like this before the December 31st deadline. I've seen this happen year after year. My neighbor, for example, Ria, she calls me last November, and she had a similar situation to SUNY's. Substantial stock compensation. She had this major tax event on the horizon as a result. By the time we got her paperwork done, it was December 19th. Her team had been rushing, everyone was distracted by the holidays, and we barely got it complete in time. I mean, we did, and she still saved on taxes, but the experience was unnecessarily stressful. Compare that to the clients who plan ahead. They have time to consider all their options, their documentation is handled properly, and they're not making rushed decisions during the busiest time of year. Plus, with an OCLAT, you can change the charity later if your priorities shift. Oh, and I should have mentioned this, you can fund a new trust each year as your income continues to grow. And if investments underperform, you still get that tax deduction with no personal liability. It's truly one of those win-win-wins. The wealth building advantage, most tax strategies just save you money. This one can actually build wealth for your family while also supporting causes you care about. And that's truly playing offense, not just defense. And look, I'm not going to sugarcoat it. This strategy isn't for everyone, but it might be perfect for you if you expect to make $750K or more this year, you have capital gains, stocks, or business income, you already give or want to give to charity, and you're interested in real wealth transfer, not just quick tax hacks. The funniest part, when SUNY's wife saw the numbers, she went from skeptical to sort of basically asking, why aren't we doing more of this? There's an old saying in wealth planning. Some people plan to pay as little tax as legally possible. Others plan to pay whatever they're told to owe. The first group, that's the one that builds generational wealth. Which group do you want to be in? The savings reality check here. People in this income bracket often pay 40 to 50% of their income in combined federal and state taxes. This strategy could cut that by half or more. So here's the deal. If you think this might be a good fit for your situation, there's a private invitation in the description below. No pressure, no big sales pitch. Just fill out a short form to see if you're a good fit. If you are, we can help get you on the right path with the OCLAT strategy tailored to your specific situation. You'll get early access to this process before the Q4 scramble when everyone else is trying to do something similar, anything to help with their taxes. Let me bring this full circle. SUNY didn't wait, and now he's ahead of the game. A couple weeks back, he called me after his company announced another funding round that increased his stock value substantially more. Most people would panic about the potential tax hit. SUNY just smiled and said, time for another OCLAT. And yeah, when his wife saw the final numbers, she also suggested that they meet with me again next year to talk about setting up another one. So complete 180 for her. The difference between a tax bill and a wealth strategy is usually timing and who's in your corner. So if you think you might be a good fit, check out that link down below in the description to see if the OCLAT strategy could work for you. Yes, tax code is complex, but that complexity creates opportunity for those who take action. This strategy has helped clients save hundreds of thousands while securing their family's financial future. Don't wait until December when everyone's rushing. See if you qualify today and get ahead of the game. If this opened your eyes or you have a question, then drop a comment. I'd love to hear your thoughts, and I read every single one. And if you found this valuable, hit subscribe because more strategies like these are coming soon. All right, as always, I'm Rich, and until next time.